Assalamualaikum warahmatullahi wabarakatuh. Good morning, good afternoon, good evening to you all. In this chapter number 7 of Kisho, Wogan, and Warfield's book, we will discuss topics on cash and receivable. But this video will be only cover cash only, and the other video will cover topics on receivable. We need to divide into 3 videos, at least 3 videos, so that it will help you to have shorter videos for you to watch. So let us start first with chapter 7 with topic of cash. In this chapter, we have 4 learning objectives that we need to accomplish. First, we can indicate how to report cash and related items. So this is the only learning objectives of this chapter about cash, while the other 4 are the objectives of receivable. So number 2 related to receivables, on the recognition of receivable. Number 4 related to the valuation of account receivable. Number 4 related to accounting issues related to recognition and valuation of notes receivables. And number 5 also on issues on notes receivables. So this is the review of chapter 7. You can see that this is the only topics that we will discuss on chapter 7 on cash. So what is cash actually? Cash is the first one. The characteristic of cash is that the cash is the most liquid assets that the company has. So what liquid means that it is ready to be used as the medium of exchange. So any other assets cannot be said as cash if they cannot, if it is not liquid and it cannot be used as a medium of exchange. But by saying medium, it means that it must be standard medium. Everybody knows it and everybody accept it as a medium of exchange. And cash also basis for measuring and accounting for all other items in financial reports. So anything that we measure in or we account for in our financial reports are based on cash. And the 4th one is it is current asset. So because it is liquid, it must be current assets. Now, what are the examples of cash? First one is the coin. You know the coin. The second one is currency, and the other one is available funds on deposit at the bank, or in Indonesia could be said as biro. And then money orders, certified checks, cashier checks, personal checks, bank draft, and saving accounts. Saving accounts is tabungan in Indonesia. So those must be readily used as a medium of exchange. It must be all liquid, no restriction put on those examples. So what it made it qualified as cash. So how to report cash? There are 2 types. The types of cash is cash equivalent. This cash equivalent is a short-term and highly liquid investment that are readily convertible to cash. It is not cash So it is said cash equivalent, but it is readily convertible to cash, and it is so near that the maturity of this cash equivalent that they present insignificant rise of changes in value. It means that if you have an financial instrument that is has the maturity of 3 months or less, and can be convertible into cash readily, it means immediately or any time that you want. So it can be said as a cash equivalent. The example of cash equivalents are government bonds, commercial paper, and money market funds. Uh, Government bonds in Indonesia could be said as Certifikat Bank Indonesia is a kind of cash equivalent since it is readily convertible to cash, and as long as the maturity of the bonds uh, no less than 3 months. And the other types of cash is cash that is restricted for certain purpose. So the company could segregate cash from regular cash, some restricted cash from regular cash, for example, to expand the plan or to retirement of long-term debt and for compensating balance. So, for example, my company has some money put in the bank as the memo or the minute of the meeting that then put that decide the company must put some money into the bank, let's say 100 billion rupiahs as money to save for planned expansion. So the money that we save for future expansion of some plants, for example, it is a cash that is restricted to be used. Since it is restricted, then this cash is not cash anymore, since it cannot be used freely by the corporation. The other example is some money or some fund that we put into, let's say, into a bank for retirement of our debt. For example, like this, in 2020, we issue a bond. The bond, let's say the bond has, let me try to have, say, in January, wait a minute, okay. Let's say in January 2020, we put some money in, we issue a bond. Let's say sorry, I'm not used to this one. Let's say the bond will mature. The par value is 100 billion rupiahs and will mature in 10 years. So when the bond due or mature in January 2030, I need money as much as 100 billion rupiahs. So during this life of this bond, is 10 years, I need to save money. Let's say this is 10. Every year I need to save money as much as 10 million rupees. Sorry, yeah, 10 million rupees, right? 10 million times, yeah, 10 million rupees. So every year since 2020, 2021, 22, 23, and so forth, I have to save money as much as 1 billion rupees, 10 million rupees. So when I have cash here, let's say I have cash of 20, let's say 40 million rupees, but among them 30 is free to be used, but 10 million rupees is put into some fund. So this 10 million rupees is not cash. It is not cash. Why? It is not cash. Why? Because it is restricted. So this condition that put us into a position that we must exclude some money from our some part of our cash into restricted cash, and it is not cash anymore. This is the example of a company called Infosys. In their notes to financial report, it is said that cash and equivalent as of March 31, 2015 and March 31, 2014 included restricted cash and bank balance of 364 million rupees and 318 million rupees. The restriction are primarily on account of cash and bank balances held by irrevocable trust controlled by the company, and bank balances are margin money deposit and against guarantees. And so this is the example of cash and cash equivalents. And the other types of cash is the bank overdraft. The bank overdraft, it happens like this. For example, I am a privileged or I am a customer of a bank, and then I can write check from using my account in the bank and write check. Let's say I have some limitation to you. Let's say my account only has 100 million rupees in the bank, but the bank said that I can overdraft or I can spend more than what I have in the bank. So the overdraft is something that is beyond my account number. So the company writes a check for more than the amount it has in a cash account. So it is generally reported as current liability. Let me use this example to you so that will help you understand this. Okay. Let me set that. Let me give an example here. So this is the example. I use the account. I like to use the account so that will help you to understand. Cash in bank. For example, I have cash in bank The money that I have in the bank is 100 million rupees. So by using cash in bank, by having cash in bank, I can write checks, right? So I can write checks. How much that I can write check is equals to 100 equals to the money that I have in the bank. That is equals to 100 million rupees. But a bank gave me let's say a privilege to spend or to write checks more than 100 billion rupees. Let's say until 150 million rupees. So it is 50% of my money in the bank. So actually, there is an overdraft here when I write check. Let's say I have written the check as much as $150. Can I say that can I say that I have 50 more million rupees in the bank? It is no. The money that I have here actually is a liability. So it is not my money. It is not cash to me, but it is liability. So actually, when I write a check, liability. So when I wrote check here of 50 million rupees, it is not my cash, but instead it is liabilities. So I hope that this will help you to understand this concept of bank overdraft. So anytime you find overdraft in a bank, in a company, for example, when you audit that company, you must know that it is not cash, but it is a current liability to the company. So this is the classification of cash related items. The first one, it is cash. It is called cash. It is classified as cash. If it is unrestricted, it must be reported as cash. But if it is restricted, you must identify and classify it as current and non-current asset. And then there is petty cash and change funds. It is pretty much like money that you save in your office for daily spending. For example, for paying taxes, paying gases, or anything else. So it must be classified as cash and reported as cash. There are also short-term paper. It is qualified as cash equivalent, short-term paper, short-term investment, but it must mature within 12 months. Okay. And then post-dated check or IOU, this is receivable. Since post-dated check, it is not check based on the money that you have in your account, but it is check that will be paid beyond certain date. So it must be receivable. And then travel advances, it is in the form of coupon, could be that you pay to your employee, for example, when they have to travel to certain cities or certain countries, you give them coupons, and then this is it is qualified as receivables. And then some postage on hand, it is prepaid expenses. For example, you have stamps, or in Indonesia could be said as materai. It is prepaid expenses. It is not cash anymore. And then bank overdraft, classification if cash, but if no offsetting allowed, it must be current liability. You must read the book on this comment here when it is offsetting allowed or not, to understand more. And then compensating balance. Compensating balance is the money that the company puts separately as deposit, maintained as a compensating balance. It is money that the company put in a bank when the company borrows some money from the bank. So this is all for this topic. I hope it will help you to understand the book well. Your job is still reading the book and understand through the book. This video is only media for you to understand, to help you to understand the book. Okay. Assalamualaikum warahmatullahi wabarakatuh.